Welcome everybody to this quick tip learning video by In the Money Stocks. Today I'm going to talk about a moving average that can consistently make you money in the market. And I'm going to show you a couple of intraday examples of this. And first off, we're going to start off with Bed Bath Beyond. And what you're going to see here is that price has rallied right up and then it goes right into what we call this 200 period moving average. Now this moving average is known in the trading world as the brick wall. If you could find another resistance point prior in the chart, this moving average should serve as very good resistance and price should be deflected back to the downside. So the key right here to remember is that all you want to see is a move right up into that moving average without any consolidation below it. Once it hits that moving average, and that is the black line here on my chart, the 200 period moving average on close, and this is just a 10-minute intraday stock chart, but the theory works on just about any time frame. But today we're just going to focus on the intraday level, and you can see how price went right up into that 200 period moving average right around the 67.90, and then boom, you got a nice little pullback, and as the stock price gets deflected right back down. So you'll see this happen quite often in the marketplace. The key to remember, you don't want to see consolidation. So if price would have got up here and then it started to move sideways here, then it would have really been no good. The moving average would have turned into a minor level. But because price came from a lower place, rallied right up into it, that resistance point is pretty major, and you can see a nice little pullback. Let's take a look at another chart from today's action. We're going to go to Salesforce.com. Pretty much the same pattern. You can see here how price rallied up, based a little bit, and then broke out to the upside. And where did it go? Right into that 200 period moving average. It pierced through there and then it stalled, and then you can see price getting deflected right back down. This is a pretty nice sell-off. Went right to that 200 period moving average and has now sold off about $2 from that level. So once again, that 200 period moving average is what we call the brick wall, and you can see how price rallies right up into that level and then boom, it just comes right back down. Now if you can find another resistance point that matches up with that 200 period moving average, it's going to just make the trade that much more effective. You're going to get you're just basically going to increase the odds of making a really good solid short trade position. Now if we could find a 200 to the downside, it would work the same way. So again, I'm just showing you a couple of examples that I've used today personally, so you could get a good feel for what we're looking at. But anytime you can find that 200 moving average on the chart and price runs right up into it without consolidating below it, it's going to create a very good risk reward scenario going forward. That's our tip for today, but this is one moving average that can make you money on a consistent basis. Have a great day, everybody.